Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian session live market analysis in the forecast webinar. Now today on 14th of December between 5 and 5:30 GMT. During this webinar time, I'll be giving the session-wise forecast for this week, Monday to Friday, 14th to 18th of December. Then I will also give the range in which the currencies, the four majors and two commodity pairs, are expected to swing, and the expected range. Besides expected forecast, session-wise forecast, I will be giving the expected range in which the currencies are expected to swing. Then finally, I will touch upon the market reading. How exactly with the help of the market reading we will be able to fine-tune the forecast, and in the event if the market goes against our expectations, what are the trading strategies we can use in order to limit the risk and maximize the profit. So it is not merely the market forecast, because many of the traders think that if the forecast is so accurate, then trading becomes easy. Even though the forecast might come true in many instances, there might be some volatile moves between the cup and the lip. So that we should be able to handle. So even though when euro is expected to gain, it is not a straight gain the players are going to make it in the market. So they will make initially some volatile move and some stop-ins and then start gaining the levels. So in that process, if you keep stop, they might hit the stops. Then in the event, what you are supposed to do? So the trading strategy is going to be vital in order to trade without any market fear, using the forecast and the market reading. So market reading and the forecast are vital, but much more important to them than them is the trading strategy. Because when the market is continuously making volatile moves, especially during the year-end time, the trading strategy of using the hedge in the last making position and using trailing stop in the profit making positions are vital in order to earn without any market fear. So we follow the derived forecast and the levels and fine-tune using the market reading in order to decide on the entry and the exit. And we use the trading strategy to limit the risk and maximize the profit, because limiting the risk is very important, and also maximize the profit is very, very important. When we become emotional, or when you are disturbed by such emotional stress, we might go in for unlimited risk, and that is very dangerous and detrimental to the account. And we might book the profit in a hurry without maximizing it because of bad experiences. So in order to avoid such emotional decisions, we use the trading strategy. So the trading strategy will be able to protect our profit without much of a difficulty, or there is no emotion attached to that of the trading strategy. So first of all, let me give you the forecast part of it. So this is the second week of December. So again, this time we'll come across the yearly trend reversal. Throughout this particular month, you come across the yearly trend reversal moves, and especially for the year-end time, the players are expected to make very big volatile moves in the market. And already you would have seen such volatile moves in the case of euro. From that 1.0607 level, straight they took the market to 1.09. And also similarly from that 1.49 level, they gained to 1.52 in the case of GBP. And from that of 123, they dropped it to 121 area or 120 area in the case of USD yen. From 1.1312 level, they dropped it to 0.98 in the case of CHF. And these are all the moves you come across in the majors as the USD weakening move. But in the case of commodity pairs, what they have done, they made a massive rise from 1.34 to 1.37 level in the case of Canadian dollar as a USD gaining move. And also in the case of Australian dollar, 0.73 to 72 area, they had dropped it. So they are capable of doing any sort of moves of this nature in order to handle the crosses. So they gain euro as well as gain USD CAD. Then what happens? Euro CAD also gain tremendously. So this is the way they handle the crosses, where the traders have got huge positions, especially in the case of crosses. They make massive moves in the market. So now everybody is talking that along with that of the US dollar, that Canadian dollar is also losing the strength. So we can always give some sort of attribute from time to time. And so what is the correlation? That US dollar is weakening besides USD CAD is, or besides Canadian dollar is also weakening. So why there is a necessity for both of them to weaken against the rest of the currencies? This is how the players make the moves in the market in order to handle the crosses, and especially during the year-end time. During the year-end time, the volatility is part of the game. So they make such volatile moves in order to earn huge money to show the maximum profit for the year-end time. That is the main reason that they make the volatile moves in the market. So coming to that of this week, what they are expected to do in the case of Euro and GBP. So in the case of Euro and GBP, they are expected to make the swing and firm up during that of the Japanese session today, and then rise during that of the European session, and some profit booking during that of the US session. Then tomorrow they are expected to make the swing and slide during that of the Japanese session, and then rise and firm up during European and US session. And you know that Wednesday, FOMC decision is there, interest rate. Everybody is anticipating FOMC, the Fed, to increase the interest rate, because you know that it is a long overdue and people are anticipating the interest rate. And once US increases the interest rate, the rest of the world is supposed to follow, because it is considered as a nodal agency. So all are just waiting for the Fed to take the decision. And in that process, all are anticipating that if US increases the interest rate, then Euro and GBP could collapse. That is what everybody is expecting. So you know that the players create the expectations and later on act against it of the traders. So this is the normal tendency. So for FOMC interest rate decision time, they are expected to make the slide before that of the FOMC, and after that of the FOMC, they are expected to make the upward spike in the case of Euro and GBP. And later on, the next day, Thursday, they are expected to make the rise to start with, and then some slide as a profit booking move. So normally whenever they make a quick upward move, then immediately they will dump their positions, lighten their positions before making further rise. So that rise, they could do it during the European and the US session. Then Friday, for the weekend, they are expected to make a dip and hit the stops of the long holders who kept a tight stop or a trailing stop, and then start rising it. And again, they are expected to make the slide during the European session in order to induce the long holders to book profit in a hurry. And later on, they are expected to make the swing and rise move. So this is what they are expected to do during this particular second week of December. Then next week onwards, again, it will be third and the fourth week. And during that time also, they are expected to make the volatile moves in the market, and then slowly gain the levels in the case of euro and gbp, and also gain the levels in the case of usdn and usd chf as a contrarian move. And then you'll come across that commodity pairs start making the usd weakening move. So now you come across the commodity pairs are making the USD gaining move to start with. And from mid of this week onwards, they are expected to make the USD weakening move in the case of commodity pairs, along with that of euro and GBP. So this is what we are expecting to happen in the coming Hello, Sandra, do you see me?
Uh,
Hello,
Hello. Okay.
yeah,
Sorry, I just
okay.
mute. Yeah.
You see me now?
Yes,
Okay,
I can see you. Sorry, I forgot to on my mic.
oh, okay, okay, fine, no issues. I think suddenly the net went off and came.
Yes.
Okay, it is live now. Is it live? I can
Yes.
continue.
Yes. This is still live.
Okay,
It's good, Doc. Please just continue.
okay, fine. I'll show the previous slide. I think that would have been missed. I think this is the last slide. Okay, fine. Thank you.
Okay.
Okay, as far as the, sorry for the interruption, and I think there was some technical issue. Now, as far as the levels are concerned, that Euro and GBP are expected to continue to gain the levels during this particular week, and USDN and USD CHF are also expected to gain the levels, and USD CAD and Australian dollar are expected to show the USD weakening move. Coming to the market reading, so Euro has not breached the initial low or the initial high. You can just refer that live market code page with it of the what I have noted down around 3:30 GMT. And in the case of GBP, it has not breached the initial high or initial low. And USD yen 120.64, 121.20. The lows and the highs are not breached. And Swiss franc also from the 98.33, 98.58, they are not breached the low or the high. And Canadian dollar 1.3720, 1.3756, they are not breached. Australian dollar also, the initial lows and the highs are not breached. So you find the market is really making sideways move, subdued move between the initial high and the low, not breaching them from that of 3:30 GMT onwards. Now it is 5:19 GMT. So it shows that relatively people are waiting to enter into the market. Probably they are interested to know about the FOMC outcome. So in that process, the market, people might think that the market will show some direction before FOMC. If they gain, probably we can position, sell positions, etc. That's what many people might be viewing the market. But the players are here to slowly gain the levels as I explained it in the market, and after that of the FOMC also they are expected to gain the levels. Now coming to that of the recommended trades, so now currently I just recommended Euro to take a buy around 1.0968, so closer to that of the low, and it got filled, so it becomes a buy limit. So buy limit becomes buy position. And in the case of GBP also, I kept the buy limit at 1.5181. When they make a small dip, another 10 pips, it can fill it. Otherwise, we can modify and buy it around 51.85, and they are expected to slowly gain the levels. So So the euro buy position is taken, and GBP I kept the buy limit order near that of the low, 1 pip above that of the initial low. And also in the case of Australian dollar, just 1 pip above that of the initial low, and already it has come closer to the high. So we'll wait, because they may initially use the commodity pairs to lead the rally and lag behind. At the time, they could make a dip and then fill my buy position and buy limit order, and then we'll be able to book. I mean, we'll be able to see the profit once they start gaining again. So you find that invariably they are making subdued moves to start with, and then later on they are expected to gain the levels. And as I explained, that the commodity pairs lead the rally and lag behind. So already the commodity pairs started showing the USD weakening moves. So that is what we are expected to see during this particular week. These are all the session timings. So every time I just show it in order to make it more familiar for those who are being following their local times. It is better to follow the GMT time in the market, so that you will be able to understand the 24 hours market cycle irrespective of the position or the country wherein you are placed. Then each session is subdivided into the early, mid, and the late sessions. So early and the late sessions, they handle the crosses. Mid sessions, they handle the early and the late session, they handle the majors, and mid session, they handle the crosses. So that we will be able to identify once you make a note of the timings what is given. Thereby, you will be able to really understand how exactly systematically the players are making the moves in the market using the bank terminals. And then we should also fine-tune our trade in line with it of their moves. So if you want to trade in majors, you have to wait for the early or the late sessions and take positions. Then you'll be able to really see quick profit. If you take position during the mid session, now it is a mid session. If we try to take a position, then you may have to wait till end of late session or early part of the next session. Only then you will be able to book profit. So that will in fact quicken our trade time, so that the entry and the exit can be done at a very quick successive time frame. Then this Friday again I got some assignment, so I will not be able to present the review part of the market analysis. So I'll come back on 21st of December and give you the forecast for the next week. Meanwhile, I will answer the questions which are asked here. And these webinars are recorded, and the recorded webinars are displayed under watch list in FX Street under the analysis and insight, what you come across as the main menu in FX Street homepage. You can show it. This analysis and insight, once you click that, you come across watch list here, and you just click watch list. It's coming. Once you click watch list, you'll find all the webinars or the recorded webinars are listed there. I think something wrong with the website. Okay. Let me answer to the questions which are asked here. If you got any question, kindly ask me. I'll be glad to answer to the questions. So if you got any question, kindly ask me the question. I'll answer those questions. If there is any doubt or difficulty in understanding my way of presentation, let me show the forecast slide. These are all the expected market moves. for this week? Okay, there is a question coming up. A lot of people are talking about crude going lower. Do you have an opinion? Crude, they just made an extreme downward move, and from the top 17th, they will simply reverse crude and make very quick upward move in the case of crude also for year end. See, normally what they do is, in the case of crude, many people take positions as futures of commodities, and the derivative market positions are taken because many people will not take the delivery of it, and it is a tradable commodity. And so you find such extreme moves, they make it like how they have done it in the case of Canadian dollar, and that is mainly to hit the stops on the lower level, extended downward stop, and then consolidate and start gaining the levels very quickly. When the traders are bearish and every rise they are willing to sell, the players will straight rise the levels and induce all to do the short covering. So if you are if you want to really trade in crude, what you do is, it's a commodity pairs. It will be making such volatile moves much more than that of the normal currencies, because the volume is less. So they have to, in order to earn the equal quantum of money, they have to make very volatile moves in those commodities. So you have to keep adequate equity and then trade in the case of commodities. May you please show the levels again? I'll show the levels. Okay, these are all the levels in which the currencies are expected to swing in this week. And Michael, my opinion is that since Fed will start the tightening cycle as planned this Wednesday, I see commodities start recovering. You are right. You are right. And Alton, very good call on GBP, intentional move last week. Will this week repeat again? Yeah, they will continue to gain the levels in the case of GBP also. And last week, because of the BOE interest rate decision, which was shifted from the first week to second week, they waited, not gaining the levels in the case of GBP. After that of interest rate decision, they made a small dip of about 30-40 pips, induce the long holders to lose patience and liquidate, and then start gaining the levels on Thursday and Friday. And now they will gain more levels in the case of GBP and also in the case of Euro. Alternatively, only then Euro GBP they will be able to make the swings. Keep in mind, they are not only here to make moves in the market, they are here to make money from that other market. So if they want to make money, what they have to do is, they have to bring in volatility in all majors and commodity pairs. So they have to necessarily handle all those pairs. So you need to have the patience to understand what pair they are handling at a given time, and then accordingly take positions. Any other question? It really helps when you combining your forecast with comments about the players' intentions, as you have in the last 2 Sundays. See, basically, it is not enough for you to get rid of the market fear only when you talk about the trend or the levels in which the currencies are expected to swing, because the players are the one who are trading against us. So we need to know their intentions. Once the intention is revealed, And once you understand, okay, they are always cunning. So whenever they make a drop, you understand, whenever they make quick moves, rather, you understand that they are making false move, so that you are not under the emotional grip. Once you avoid being under the emotional grip, you don't do distress trades. So that is the first and primemost thing I want to achieve by my repeated webinars. Mainly, I wanted to see that the traders get rid of the market fear. Then later on, they can develop their own market reading system and then try to trade on their own at ease. Because uh, if you just try to explore the entire domain of Forex analysis and also other events, and how the experts talk about, predominantly they give either way possibilities, one, then also they talk in a high profile conditions which the normal traders are not in a position to understand in full. Even if they try to understand, then they become very good analysts and start using those words in their talk. But they are not becoming good traders, because the traders need to understand what is going to be the intention of the player. Thereby, they will be able to make the move in the market in a specific time frame. So now you should be able to understand, okay, in another 2 hours, they should be able to rise. Then your mind is able to tell you, okay, small dip buy, then try to book profit during the rise. So that sort of decisions you will be able to take. And also the time frame I have given, the early and the late sessions. So you wait for those times and then try to enter into the market. Then you find trading becomes really a child's play. Then are we expecting USD CAD reversing down? Yes, after this extended upward stop, and they are expected to make an aggressive reversal move in the case of USD CAD. Always, you know very well, whenever they are making 200, 300 pips in a hurry, the main intention is to trap all the unexpected surprised traders and induce them to do the short covering by holding high, pretend as if it is going to further make rise. And see, for weekend, obviously they can make a rise, so those who are afraid of margin will go in for a short covering. But nobody will take a fresh buy after the rise, because everybody will hesitate, especially people will be more curious to know what is going to happen to crude for CAD movement, and also what is going to happen for Fed decision. So when the people are not committing positions, then the players will try to hold and induce the other traders who had taken higher level sells even at the after the rise level, like 1.37, 1.3750. If somebody has taken 1.3750, if somebody has taken a sell position, they will hold and see that they are all booking minimal profit before making a drop to 1.34. This is the normal way of handling the market. So you need enormous patience to earn substantial money from that of the market. USD CAD is expected to slowly drop during that of this month. By year-end time, you'll come across USD CAD coming to the lower levels, still lower levels. Always the extended stop ends will lead to that of the intentional move in the opposite direction. So early euro position is filled, and it is almost holding around the same level. GBP is still not filled, so they could make a small dip during start of the late session, and then they could get a fill. And then I am keeping the hedge order, sell stop to limit the risk. And once a position makes profit, I'll keep stop at entry and remove the hedge order. so that I will trail the stop in profit making position and then also trail the take profit order. Thereby, I'll be able to maximize the profit. So this, you have to keep it in mind that the trading strategy is vital. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and you people for your patient listening and understanding of the market, and try to get rid of the market fear to do wise trades. And always keep in mind it is a man-made market, so men will try to trap other people. So we should not get trapped again and again. So for that, control your emotions. You will be in a position to really earn good profit in small swing trades. Thereby, you will be able to build up your equity. So thank you one and all. See you on next Monday. During the next webinar, I'll be giving the forecast for the next week. Thank you one and all. Wish you all happy trading.